It's too much. There's too many earnings coming right now. It's too crazy. There's too many videos I'm producing right now. It's out of control. Okay. Oh my gosh. Public count here today, $3.3 million. Yes, it has crossed 3.3 million. Congratulations to everybody out there hitting record highs in your portfolios. Absolutely incredible to see. But it's not as good as it looks because I have actually two stocks that are crashing here today. Not one, two stocks that are crashing. So we're going to go through those two stocks. What's going on? What earnings did they report? Am I going to sell those stocks? Buy more of those stocks? What's my feeling? Am I just going to hold? Okay. From there, we're going to go ahead and react to two videos here. We're going to react to this one, Palantir investors. Here's my notes to be cautious. So this should be a relevant interview for anybody that holds Palantir out there, right? I think you guys should enjoy that one. And then additionally, I want to react to this one because we had some labor data, some JOLTS data come out this morning. I want to talk a little bit about what's going on there and what it means for the economy, okay? Busy times, folks. AMD is going to report earnings after the bell, so I'll be doing an AMD video tonight at some point in time on the main channel. Last night, I did a Palantir video on the main channel, all in depth on their earnings. It is just busy times, folks. It is very, very busy times. All I need from you guys is one thing only, and it's for you to smash that thumbs up button. And you can make sure you subscribe to the channel. 75,000 plus subscribers going to react to the channel. Appreciate each and every one of you. Additionally, if you're looking to apply to my private stock group, private wealth group, get access to all my best course curriculums. It'd be like the amount of money that I put in total, on the cost basis. Like, that's just ridiculous. The cost basis, 25,000, we're up to 63,000 just today alone. Like, this is insane, right? Meta, the great thing with Meta is it only has to make very small moves, and it's monumental amounts of money. Like, Meta's up 1.3%, and yet I'm up $15,000 plus today, just on a 1.3% move. It's incredible, right? And it's flirting with crossing that $1 million in profits. Absolutely incredible. Technically, if you count the shares already took for profits at the end of 2024, we've already made well over $1 million in Meta stock. But it's just cool to actually see the number here. Fubo's another one making an upward move. That one's up 11% here. They up $9,400. As that gets closer and closer to the deal actually going through with Disney, I think the stock will continue to show momentum as you get closer to that time there. But that's all cool. What do we have going on? Because I got some stocks that are crashing today. One is PayPal. Man, we lost a lot of those gains. I went into these earnings this morning with over $80,000 in gains and down to $51,000 in gains in PayPal, right? $32,000 down on that stock here today, down about 12%. So we're going to discuss PayPal in detail in this video here today, okay? EL stock, Estee Lauder. Can you say it louder? I mean, it's so disappointing, okay? And we'll go through all the numbers and whatnot, but let me say what's so disappointing in regards to EL stock before we even get rolling here. This one was so well positioned for a massive move up in the stock if they just came through with decent numbers and a decent conference call. But that didn't happen. The numbers were bad. We're going to go through them in just a moment. They couldn't even come through with just decent numbers. If it was just decent, we'd be talking about a stock that's up 20 or 30% today. No joke. But they couldn't do it. And so we got a stock here that's down, 15% on the day or so, right? We'll go through the numbers. We'll talk about that one in depth, right? But in regards to EL, we lost all our gains in this one here today, right? And now negative on the position. So it's a smaller position, so it's not that relevant. But still, I'm counting on this position over time. So what happened with EL? Well, they had an F plus.
All right. So before he jumps into EL, what I want to do is look at Estee Lauder right here, right? First off, now I covered these yesterday. If you want to go back to the previous video, after, of course, watch this one all the way to the end. But if you go back to the previous video, I covered these yesterday live in our trading room. And first thing is EL right here. First, you could have avoided this. You could have avoided this knockout punch right here. This monkey hammer, as we like to call it. A move like this, a 17% move down. The technical term for that is getting monkey hammered. Okay. Could have avoided this monkey hammer right here for a couple ways. First, yes, it was trending higher. Our outlier trend template did show it was going north, right? You've got the 10 over the 20, price over the 50, pointing northward, but running up into this order block that was created, right? And then additionally, with earnings, I don't ever like to trade earnings if I don't have to. My earnings template to know if I'm going to get in or stay in is the trade already profitable? Well, I imagine that if you had bought it down here in the 70-ish area, that when it got up to 84, yeah, it was already profitable. Would the expected move break the trend line? So the trend line that I always follow is the 10-period moving average. So if you had priced out the expected move, which is taking the at-the-money straddle price, if you had taken the at-the-money straddle price and looked at it right here, I'm pretty sure it would absolutely have broken this 10-period moving average, okay? Now, why does the 10-period moving average matter? The 10-period moving average, you can pause the video, take a screenshot of this, right? Is the indicator of the short-term trend. When the 10-period moving average is broken, that almost every time is a warning to say, hey, something's not right here, right? Here's an example. On Estee Lauder, it was going up. It went over the 10-period moving average. The very first time it closed under it was December 17th. It went a whole month of sideways, right? So the very first time it closed under it, it went a whole month of sideways at that point. We can take a look at the SPY, right? It's not just Estee Lauder, right? The first time it closed under the 10 after this trend right here. Let's say this trend, let's just pick it up in September. All the way, first time it closed under the 10, it really struggled. It did cross back over, again, closed under the 10, and then it's gone sideways basically since November. The market's gone sideways since November. It may not feel like that to you, but mathematically speaking, that's what it's been doing. So the first time that it hits under the 10 and closes under the 10, that's a really big warning sign to me. And if my expected move is going to take me under that trend line, I'm not even interested. So could have avoided this in that case as well. Now, inside of outlier, what I wanted to look at here was how would I have traded it, right? So let's say, for example, we got in on this buy signal on January 16th. Let's just price that out here real quick. So January 16th here. We've got the 10 over the 20, price over the 50. That'll work right there. I didn't even realize it was like that. And then what I do is I look for, this is the behavioral heat map, right? So the behavioral heat map is a representation of what the market is doing, okay? Are people coming in? Are they saying buy, buy, buy? Are they getting greedier and greedier? Or are they saying sell, sell, sell? They're getting more and more fearful, right? We've quantified that on every single stock out there that we cover. We cover 2,500 stocks. So looking at it right here, the heat map value is going to show as either an R or a green and then a value. It goes from 0 to 50 on the R, 0 to 50 on green. Green being greed, of course. So at this point, it was at a R0. So there was no fear or no greed in the stock. Very neutral. Got the buy signal. Now for me, I will hold it at this point when it's any R value, any red, any R value, I would get out at G13. So let's say that I got in. I could have followed this. Now follow along these numbers right here. 0, 1, 2, 3, 5, 7, 9, 11, 13. So 13 happened on January 29th. So if we go to January 29th, almost the top candle. So let's go from opening to close, 7.5% move in the span of a couple days, leading up into earnings, which is one of my favorite trades to make, not having the risk on going into earnings, and still coming out with a decent profit, right? A 7.5% return in 8 candles. I'll take that. I'll take that all day. You throw some options behind that, you probably got a 50% return on your options, maybe more in the span of just a couple days, and not having that risk on at earnings. So unfortunately, you know, Jeremy didn't have outlier to see. Maybe he should get out here, but that's how I would have traded it. So let's also keep in mind here, right? He's going to go through all these fundamentals. I haven't watched this video yet, but I can imagine that's where it's going. He's going to go through all these fundamentals. He's going to look at all these numbers. He's going to have all this bullish case study behind it. But it doesn't matter. It doesn't matter because only price pays, right? Only price pays. Where's my slide for that? Only price pays. And this is how you could have traded into Estee Lauder. This is how you could have traded into Estee Lauder, into earnings, following that buy signal, and still come out with a nice profit without getting wrecked at earnings. So these fundamentals that he's going to talk about here, do they actually matter? I don't think they matter at all.
Plus, income statement here. Net sales were down 6%. Not good, obviously. Cost us.
By the way, I am running this at 50%, 1.5 times speed because it's a decently long video. And I'll try and get as much as I can. And let me introduce myself real quick. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successful trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, we'll get back to today's video and stick around to see how we rank this out of 10. And of course, subscribe if you haven't done so already.
Sales, one bright spot. They did bring that down 17% year over year, which made gross profit only down 2%. Now, if your revenue is down 6%, your gross profit's only down 2%, you know, you're definitely managing your cost of sales pretty well. And that's, if we want one bright spot to look at in these earnings, that might be the one bright spot. Now, selling general administrative was up 2% for the company. Additionally, they had all these massive one-offs. They had a restructuring other charge of $181 million. They had impairment of goodwill and intangible assets of $861 million. Now, do keep in mind, add those numbers together, it's over $1 billion of like basically one-offs there, right? That's not going to keep occurring. And so the good news is this operating expense profile will drop immensely over the next few quarters. Okay, so do keep that in mind. And that is going to be something that's very, very positive for the company. But it makes,
again, none of this matters. If you're buying a stock, the only way you make money is if price is going up. So come up with all the excuses, all the reasoning you can to say why it should go up, which is the most dangerous word in investing. Why a stock should do something. But at the end of the day, if it doesn't do that thing, up or down, whatever you decided that it should do, you're not getting paid.
makes it look very ugly right now, right? Other loss, 580 million, or excuse me, operating loss, $580 million operating loss. But once again, you get hit with $1 billion plus of one-offs, like, yeah, your operating loss is going to be ugly, right? And so EPS, everything was ugly, right? But once again, it's mainly because of those one-offs there. The main number I don't like is revenue still going down. We've got to flip back to revenue positive and keep that momentum going, right? Now, where was the weakness? You've got to understand, you've got to find where the weakness is in an international business. And what we're going to find with Estee Lauder, here's where the weakness is. Europe, the Middle East, and Africa, revenue was down 6%. And Asia Pacific was down 11%. Now, if you look at the Americas, especially, if you look at kind of currency, I mean, the Americas look good. Americas look good. I shouldn't say good. The Americas looked fine. That's not the issue. The issue is Europe, the Middle East, Africa, Asia Pacific, right? That's where their weakness is, down 6% and 11%. And so clearly they have work to do in those areas, 100%. There's no debating that, right? As far as what do they blame it on? They say net sales decreased 6% Europe, Middle East, and Africa, driven by double-digit decline in the company's global travel retail business. The travel retail business is still hurting. That's the airport business and whatnot, that they have a lot of stores and just rough, reflecting the impacts from an overall challenging retail environment, including subdued sentiment from Chinese consumers, mixed performance across the region's markets, resulting in flat overall net sales. Operating income decreased primarily due to the decline in net sales and unfavorable year-over-year impact on net intercompany activity, partially offset by lower cost of sales. Asia Pacific sales decreased 11%, primarily driven by the impacts from an overall challenging retail environment, including subdued consumer sentiment in mainland China, Korea, Hong Kong, SAR. The net sales decline in Korea also reflects a strategic exit of Dr. Jart from the travel retail channel in November 2024. Operating income decreased primarily due to sales being down, right? Now, company is keeping a dividend right now, 35 cents, which is fine. They're not in that bad of a financial situation that they can't pay dividend, right? But the moral of the story is they've got a lot of work to do, clearly, in their more international business, right? There's no debating that. Now, if we look at the balance sheet's in good place.
Honestly, like, I don't even want to listen to that. There's nothing. What does it matter? The balance sheet, the sales in China, who cares? Who freaking cares, right? If price ain't going up, I don't want to own it. I don't want you to own it, right? So let's skip ahead. I know he's going to talk about PayPal, and that was another one we covered yesterday in the trading room. Let me see if I can get to where that starts. PayPal.
Shares, because these numbers suck so bad right now. Well, guess what? Do I want to buy more shares?
Oh, okay. I was hoping he would get to this point. Does he want to buy more shares of Estee Lauder? Before he answers, let's take a quote from one of my colleagues, market wizard, Paul Tudor Jones. If I have positions going against me, I get right out. If they're going for me, I keep them. Risk control is the most important thing in trading. If you have a losing position that's making you uncomfortable, the solution is very simple. Get out, because you can always get back in. One of the greatest traders of all time. Let's see what Jeremy has to say.
Short-term pain for long-term gain. And that's what I feel like in regards to EL stock here. I do want to buy more shares. The balance sheet and the brands are too...
Excuse me while I barf.
Too good to say they got the cash to make it through this mess, right? They got the brands to make it through this mess. And I believe they will make it through this mess. And then I believe the share price appreciation that is going to occur over the next several years is going to be dramatic. We're not talking like, oh, maybe we'll get 10% or 20%. No. Like, we're going to be talking about, like, a double up, triple up in the stock, at least in my personal opinion, over the next few years. So we'll see how it all plays.
A double and triple up on the stock. Okay. Well, let's do one more from Paul Tudor Jones. Losers, average losers, Paul Tudor Jones. Same person we're talking about here. One of the greatest traders of all time, had to put on his wall so he wouldn't forget, losers, average losers. If you're going to double and triple up on something that you're already losing on, you're just throwing good money after bad, right? It's not going to fix the problem that you've already created here. Unfortunately, there was a time to exit. It was before earnings, and now you may have 6, 8, 12 months to recover what just happened in a single day. Yeah, no. By the way, in the previous video we covered, be sure to watch that one. That was the one that we covered. It should be right before this that airs. He talked about how he was expecting a 25 to 30% gain at earnings, right? Putting it somewhere up here. That's what he said should happen. Even if his quote was, even if it's halfway decent earnings, it should have a giant gain like that.
Plays out, but I actually welcome the sell-off here today, and I should be buying some more shares of this one, okay? Alrighty, next one up here is PayPal. So what's going on in regards to PayPal? Well, net revenues came in at $8.3 billion versus $8 billion the same quarter last year. So
okay, I want him to explain to you just how wonderful PayPal, the company, is on the balance sheets. I want him to show you how much free cash flow they have. I want him to tell you just exactly what an incredible story PayPal has. And then I'm going to show you that only price pays.
So good to see revenues up about, we can call it a little over $300 million year over year. Transaction expense was, almost flat. Like it was up very slightly. I think they did a great job managing that. Transaction and credit losses was up to 434 mil versus 396 mil. Customer support and operations, they actually brought that number down on a year-over-year basis to 451 mil from 465. Here's where there's a trouble line. Sales and marketing. $626 million in sales and marketing. That's a big expense, right? Compared to $466 million in sales and marketing. And my opinion on that is, like, why did the sales and marketing go up so much? Here's why. They had a whole Will Ferrell commercial. They were running that commercial like crazy in the fourth quarter of the year. You probably saw it on maybe YouTube. You probably saw it on television. Like you saw it everywhere, right? And obviously the fourth quarter is also the most expensive time to run ads because it's Christmas time. Everybody's running ads. And we had an election cycle, right? That ran in October and into November. So, the amount of money you had to pay were pretty outstanding if you're running ads, right? So the moral of the story is, ouch. But one of those things like, it's for a long-term gain there, right? Technology and development, 773 mil versus 770. That's, they roughly kept that in line on a year-over-year basis.
Again, excuse. Justification. He's got like several minutes of this. Let's just skip forward here.
We're purchasing approximately 92 million shares of stock. But additionally, something big happened today. The company announced, board of directors is going to do they're going to authorize another $15 billion stock repurchase program, which is crazy. This new authorization is in addition to the company's June 2022 stock repurchase program, which had $4.86 billion remaining authorization. So PayPal's going to be buying back a lot of shares. And so you're going to see the share count that PayPal has go down immensely over this next year. Like not a small amount. We're talking. So basically PayPal's going to set up for that earnings per share to skyrocket throughout this year and skyrocket even more in 2026. Like it's going to be a very exciting earnings per share story on this company. Now, if you look at their guidance, they guided for GAAP EPS of.
Well, yeah, it's going to be exciting because they're reducing the denominator, right? They are they're fudging the numbers to get to what they want to see. So let's I don't want to listen anymore about how great PayPal the stock is. Let's just look at how not great PayPal the stock is actually. So close to close, actually I need to go on top of that candle. Close to close down 12%. Maybe more. Hang on. There we go. 13% ish. That's an ugly monkey hammer right there. That's not what you want to see. That's what happens when you get stuck in a stock that you're like, frick, I don't want to deal with this for a while. But if I'm a long-term investor, I gotta hold it until it comes back to even, right? Okay, so PayPal, looking at this, I would not have bought this with your money. No way. What you see right there are order blocks. What you see right there are order blocks. Order blocks are large institutional orders that tell you where support and resistance zones are. Now we are actively, when I say actively, I mean like literally yesterday, literally today, working on bringing these order blocks into Outlier so that you'll be able to see them right here in the Outlier charts, which we are getting an upgrade on the Outlier charts as well. But let's paper trade this one out too, right? So we got this buy signal on January 22nd. So let me mark where January 22nd is here. Yeah, first off, I still wouldn't have taken that buy signal. Not a snowflake's chance in hell would I have taken this buy signal. And that's okay, right? All these buy and sell signals that come through, you don't have to take any of them, right? You don't have to at all. But if we're looking at it, I wouldn't have taken it. No way. And looking at the data here, I wouldn't have taken it because these order blocks go back years. The further back these order blocks go, the harder they are to break. So these are large institutional orders that want to be filled. When price comes up into this area, it gets smacked down, right? It gets monkey hammered right back down. Not every single time, but it works really, really well. So this one was created in October 2022. First test of it rejected. Second test of it rejected. Now we've stacked order blocks here. We've got two. Third test of it rejected. Okay, let's keep on going. Years go by. That was 2022 when all that happened. Years go by. And now we're in 2024. Fourth rejection, fifth rejection, sixth rejection, seventh rejection, eighth rejection. Let's call it 9 rejections right here. 9 times. And please go ahead and put in the chat that order blocks don't work. 9 times did price come into this area. And those open orders ready to sell as soon as you get up into there, took it out. So there's no chance that I would have bought this. If I were buying it, right? Let's say I bought it down here when I'm theoretical. Let's say, for example, you got the 10 over 20, price over 50. Let's say it was right here. I love to trade up into these order blocks, but the moment it comes into this, I am on high alert. The moment it comes into this, I put it on a 5-minute chart and I do it like this. Let me scroll to that slide real quick. Here, imagine that order block. Okay. Imagine we're getting right up into this order block and it continues on the rest of the day on the 5-minute chart. I have no problem here. I'll hold it, but I'm going to close it at the end of the day. But if it comes up into that order block and you've got the 10-20 crossover right here on the 5-minute chart, I will day trade out of that. And I don't like to day trade at all. That's the one exception I'll do, right? And you can see it went up into this area, call it 86.75, and then got monkey hammered right back down to 83. So would have been able to keep the profits, a 4.5% sell-off right there on that order block rejection. And then it went sideways basically, right? It's still at $86 November to basically February. And then it gets monkey hammered down. So I wouldn't have traded that. I wouldn't have bought this with Jeremy's money. I can't imagine for any reason why I would be interested in buying this. Now, if we zoom out a little bit, here, what I want to see is this. This reminds me a lot of the market cycle investing. Let me show you what I mean. This and this, right? They look really similar, don't they? It's because it plays out over and over and over. It's investor psychology. It's exactly this: sell, 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 or buy, 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 right? Now we're on the opposite end of that down here. Could it be the start of the next run? It might. It just might. But as of right now, I wouldn't be buying it at all until it breaches over, let's say 95-ish. Once it gets up to that 95 area, then I'd be a lot more interested in buying it, right? And you might be thinking, if you're a long-term investor, well, why would I buy it at 95 when I could buy it at 77? I'll show you AMD, and I'll show you why. AMD is going to be down 10% today. 10% when the market opens, right? And if you're buying dips, this is what you could run into, right? Imagine you're like, oh, well, I'll just buy this dip on PayPal. Imagine you bought the dip on AMD when it came from, let's say, 170 down to 160. And you bought the dip again at 150, and again at 130, and again at 120 and 140, and all the way down. And it's going to open under 110 this morning, right? That's why you don't buy dips. No way. No, sir. No, ma'am. Do not buy dips until they have found their bottom and start coming back up. Until the dip has found its bottom and starts coming back up, right? In fact, this is a decent example. When a dip finds its bottom, starts coming back up. When it finds its bottom and starts coming back up, that's the opportunity to get in, because only price pays, okay? You can be so stoked that you're buying the stock and getting the best deal ever, but if the dip keeps on dipping, you're going to be not a very happy camper, right? If the dip continues on, let me see how far back I can pull this. If the dip continues on and on and on and on and on, that's not a great lifestyle. You're losing sleep at night. You're losing money every day. Every day you log into your trading account, if you're even brave enough to log into your trading account, and seeing money just evaporate into thin air. And then your wife is probably throwing stuff at you, right? You're probably questioning your existence in life. You're definitely wondering, hey, am I going to be able to retire? Am I going to be able to send my kids to college? All the while convincing yourself it's a great company. Look at the fundamentals. Everything is going to be great someday. Or you find a stock that's already trending up and you buy that instead. Don't buy the things on the way down when you can just wait and buy the stock when it's on its way up, right? Now, how do you know if it's on its way up? Do the outlier trend template. Your 10 over the 20, price over the 50. Okay, simple as that. When those three are stacked north, and the trend is up. And yeah, it can absolutely fake you out, right? It can fake you out and you might lose $1 or $2 here and there. But you're going to catch those big moves without being on the other side when the moves are going down, right? You'll be able to catch the gain on those without being on the down slope, right? Look at this. I didn't even know that this was going to be here. So look at this huge move, right? 10 over 20, price over 50. Boom, 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 boom. First day it crosses under the 10. Remember, I talked about that earlier. That was your warning sign. Goodbye. Good night. That went from $10-ish down to $6 before it started to come back up. And then your 10, 20, 50 crosses back up. Went from $6 and it's continued to rocket ship higher, right? $16, $6 to $16. You're closed under the 10, have some problems for a while, and then once again, if you waited, instead of buying it on the way down at, let's call it $14. Yeah, great example, right? Let's say you wanted to buy this stock. Instead of buying it on its way down to $14, and you're struggling, and you're wasting months, and you're losing sleep at night, and you're having to duck and dodge, glasses and plates that your wife's throwing at you. How about buying it instead when it's on its way up at the same price? And then look at it go. This is how the game is played. I'm giving you the rules. This is how the game is played. It's your choice. It's your choice. You can play by the rules of the game, or you can stand on the train tracks and look at the train in the eyes and say, I am smarter than you, Mr. Market. I did my due diligence. I saw the balance sheets. I saw the income statements, and I saw those free cash flows. And I know that I am buying the very bottom. I'm getting the best deal of all time. I am Nancy Pelosi, and prices are going up because I bought it right here. You know what's going to happen? You're going to get your ass wiped out. You will be run over so fast, like the market's just going to laugh at you. So the choice is yours. Do what you want. Do what you want. But I would much rather be on the side of the trade that's going up than be on the side of the trade that's going down. So let's rank this video here. This is a monkey hammer video, right? This is what it's like when you don't have all the data, right? When you don't have outlier, when you don't see all this stuff, and you're like, geez, what have I done? Okay. I am trying my very best to give you the very best content out there, because people like Jeremy, in my opinion, want the clicks, want the excitement, want the justification. And when things aren't working out, they don't even know what to do. Right. And I can tell you one thing, doubling up and tripling up is not what to do when your stock is getting monkey hammered. So where would you rank this? Put it in the chat while I think about my results for a moment. Put it in the chat. I'm going to throw it into painful. I'm going to throw it into number 2, painful, because I'm sure that this felt really painful to wake up this morning and to see 2 of your stocks down double-digit percentages, with AMD also going to be down 10% today, which I know he just made a video on that too, so we might be making a video on that. Like legitimately, you don't have to hold things that are going down. If you are choosing to hold a stock that's going down, you are also in this painful category as well, right? Or you can buy it on the way up, right? You can buy it when it's on its way up, when it's found its bottom, when it's starting to come back up. And then you're going to be impressive, epic, and legendary. So, of course, tell me what you're trading in the chat. And remember, only price pays. Be sure to come back tomorrow, where we'll help you save time, make money, and start winning with less risk together as a team. YouTube is going to YouTube's going to show a couple of recommended videos right here. I recommend you watch one of them, and have a fantastic day.